Hello, I'm Rachel Wiest with Triangle MLS, and I'm here with Stacy Anfinson. Hello, Stacy.
Hello, Rachel.
We're going to talk about May.
What a good month.
What a good month. We're going to cover two areas. We're going to talk about our usual monthly indicators, and then we're going to spend a little time on the effect of decreasing inventory. So, monthly indicators. How did we do in May with closings and pendings, etc.?
We're starting to sound like a broken record, but at least we'd be a broken record on the good side instead of being a broken record on the bad side. So, inventory was down 26%, pendings were up 30%, closings were up 28%, and showings were up 11%. So, most of those percentages, double-digit increases we've seen for most of this year. That's really, really good for the market.
Yes, I'd have to say when I see these statistics, I always kind of do a little happy dance in my office. It's nice to see that we're still progressing in a really positive way and pretty strongly. It's not even a weak trickle. How about the effects of decreasing inventory? We've seen fewer properties coming on the market, and now that sales are up, it has to mean that there's less inventory.
Yeah. Well, one of the things you look at from inventory is current month inventory versus the prior year's month inventory. We've had 17 consecutive month-over-month decreases in inventory, going all the way back to December of 2010. So at some point in time, that's got to have an effect on the market in terms of days on the market and expired and withdrawn listings and other metrics.
Well, that's a good point. How about in individual price brackets? Is there a declining supply in some and not in others? Are we still having a hard time pushing higher priced properties?
Well, when we look at the overall supply, the supply peaked at 16 months, and that was back in January of 2009, so we're essentially 3 years past that. The current supply of 5 months is the lowest since August of 2007, so that's a long time that we've had some supply numbers being very, very strong.
Excellent.
Then we talk about the individual price brackets. We look at when you read the report, which I'm sure everybody's going to do, there's 108 different ones in all the 4 counties. And this month there are 46 that had an oversupply. Now remember, an oversupply is 10 months of supply or higher.
Okay.
That's down 21 percentage points, not 21%, but 21 percentage points compared to the peak in May of 2009. So residential real estate is subject to the laws of supply and demand. So when you have an oversupply of something's got to happen. And when inventory comes down, there's a lot of good things that happen in our market, and that's essentially what we've seen now, is that you had a lot of brackets that were oversupplied. We still have a lot of brackets that are oversupplied, but a lot less than there were before. The historical norm for oversupply brackets is about 30%. At the peak, it was between 60 and 65%. This month, we're about 41%. So we still have a ways to go back to the norm, but compared to how bad it was, things are really good.
Excellent. So what is the effect of all these changes to the market on days on market?
Well, as we discussed the last couple of months, as we were kind of waiting for that to happen, days on market had actually increased the fourth quarter of last year and the first quarter of this year, and it really didn't make sense when you had inventory going down and sales going up. But this May was the 3rd consecutive month where days on the market had gone down compared to the prior month. The current average for the 4 counties based on May closings was 111 days, and that's the lowest since December of 2010. So a lot of these metrics that we've thrown out here, we're going back 2 and 3 years to get comparatives on, so that's really good.
That's excellent. That's excellent news. Well, thank you very much for joining us. Please go to www.trianglemls.com to look at all the statistical reports that are available, and we'll see you next month.